Hey guys, what's up and welcome to a new Tesla update video. So as usual, let's just get right into it. Check out what happened in the market today and what we can expect going into next week. So by the way, in case you're not aware, first of all, of course, hit that like button, guys, if you enjoy these videos, if they're helpful, whatever, and you want to keep, of course, seeing them. It lets me know, of course, how much people are enjoying them or if they're finding them useful, any of that stuff. Now, it's important to keep in mind that tomorrow Tesla is reporting their, I believe, Q1 delivery numbers. So, and production, delivery slash production, right? Very important. Now, it's going to be pretty interesting. And the reason I say that is because Q1 historically is the worst month for Tesla of the 3 months. The worst quarter for Tesla of the 4 quarters total, or I guess compared to the other 3. And in general, just in the automobile industry, just selling cars in general, Q1 is always by far the weakest quarter of all the 4 quarters, by a significant margin as well. Probably because, it just came out of holidays and everything, and people are just spending less. So keep that in mind. It'll be interesting. But the reason I bring it up right now is because there's actually a chance that, so the estimates from analysts actually went down, but there's a chance that Tesla might not, I don't think they'll miss. I'll be surprised if they miss. Not too surprised, in all honesty, but I'll be surprised if they miss. But I wouldn't be surprised if they don't just completely destroy it and beat it like they always do, just for this quarter. Only because Shanghai has been essentially closed for the whole week, and February is a shorter month. So that could impact the numbers overall. But again, we'll see. So I'll tell you guys a small little trade I did today, or I guess literally just the market close, and just in case. But let's take a look at Tesla. So what happened? So we ended up closing the day up 0.65% for 1,084.59, which I have to say, very, very decent closure. I'm not gonna lie, actually better than I expected. I expected it to almost collapse today. I really did, but it didn't. It actually held up. So you can see this candle right here. This area right here, near the beginning of the day, it fell under the 1070 to 72 range, which is where, in my opinion, it can start getting pretty bearish. And it fell under for longer than just a few minutes. It was there for easily 10 minutes or something like that, which is not that long, but it's not necessarily short. And then just pumped it right back up, which I'm not gonna lie, I was a tiny bit surprised, but sometimes you get these bear traps like this. You have to keep that in mind. I didn't play this or anything. I actually sold I had a put that I sold for a little bit of profit, but I didn't play this specific area. I just kind of sold my put somewhere around when it started going back up. But regardless, the point is that I'm very surprised that it actually held above this. I really thought this was the indicator that, okay, it's probably going to come out or reject around here and then start collapsing. It didn't. So I'm a little bit surprised about that. So Tesla's been quite resilient today, I must say. But taking a look at the overall picture over here, right? So taking a look at the 1 hour, for instance. So one indicator I personally like to use are the Bollinger Bands. Now, the Bollinger Bands essentially give you an idea as to when things are about to explode in one or the other direction. So the way you want to look at it is actually quite simple. So there's still a decent room for consolidation, in my honest opinion. I wouldn't be surprised if Tesla consolidates a little bit more, maybe one more day, maybe on Monday. We'll see. But the point is that you can see how these bands get tight, right? So you can see it was kind of getting tight around here, then it exploded to the upside. Now it's getting tight again. And again, I wouldn't be super shocked if it gets, consolidates a tiny bit more around this general area that we've pretty much been in the past couple of days, maybe a day or two more at most, in my opinion, but we'll see. But the point is that as this gets tighter and tighter and tighter, that usually means that it's about to explode into a direction, of course, being up or down. And then you want to try using other metrics to determine which direction that'll be. Similar concept kind of happened over here. You can see it kind of gets, fairly tight overall, kind of drop down, and then it kind of starts exploding up, right? Same thing over here. You can see this is the really good one where, it was kind of getting really, really tight, and then it exploded downwards. Had a little bit of a dead cat bounce, and then continued exploding. So the point is that this is essentially telling us that it's going to move pretty aggressively somewhere relatively soon, especially if this gets tighter and longer while being tight. It'll get even more explosive. That's essentially the way that looks. Now, obviously, we want to figure out where is it going to move. Well, going back to the 1 hour chart. So one of my personal favorite indicators and the ways to determine a move is the RSI to the stock movement. So I've talked about this many times before, and we've used this many times before to success, I might add, that indicated and predicted the move. So I obviously think that it's going to go downwards. Number one, I'll be really surprised if there's that much more steam left to really push through this level, 11.15. I'll be quite honestly surprised. Now, I did take one trade literally as the market closed, 3 minutes before the market closed. I got a call for next Friday, 11.50. Now, the reason I did this, and I only got one of them, this is just a a FOMO protection, if you will. It's almost like a hedge to the upside. And the reason is because I ultimately expect and want it to fall, because I want to start buying shares somewhere at this, general level around here, like this 1,000, low 1,000s to like the mid 900s. This general area is my current buy zone. So I want it to fall. But just in case the delivery numbers come in really good or some other piece of news comes in, I got the call, a weekly call, just in case we get some kind of crazy pump similar to what we had here. Ultimately, that's like an insurance. Think of it that way. That call I bought is literally insurance to the upside, because ultimately I'm playing for the downside, or I guess waiting for the downside. So it's pretty much anti-FOMO. Now, going back to what I was talking about with the RSI. So we did talk about this before, and we used it to success before. But you can see the RSI is showing a bearish divergence on the 1 hour. Now, the 1 hour time frame, people, and sometimes I've questioned this myself, I never really understood it, but it's like, well, what's the difference between looking at this on the 1 hour and seeing this kind of RSI versus on the daily chart, which just shows an entirely different RSI? The difference is the daily's RSI is showing you a move that'll be in a more over like a longer period of time, essentially. The 1 hour RSI, in this case at least, or like the shorter time frame you go, is showing you a move in a shorter time frame, or a quicker move that'll happen faster. It's like a shorter time frame. It's like more of like a quick swing as opposed to like a long-term swing, essentially. The daily shows you the big picture, like the 1 hour in this case will show you the small picture. That's the best way to think about it. But anyways, looking at the RSI, so you can see the RSI's peak so far in this overall uptrend rally has been at this like roughly 87 level, which was back when we touched point around 1035 on this initial rally before things started slowly cooling off, and then before the actual next little pump that we had with the stock split. But the thing to keep in mind is, as it started cooling off, you can see the RSI also started cooling off. As we pumped up, literally a full to the max, to the very top, almost about 10% from there, and from the peak of this rally, that was about a 7% move. The RSI didn't even come relatively close to this 87. It peaked at 78. So it couldn't even pass 80, let alone come over to 87. So the fact that the stock went higher, but the RSI is setting a lower high, and now it's consolidating, and even where the RSI is right now, you can see it's setting a lower low compared to this, right? It's constantly setting lower highs and lower lows, even though the stock is still sitting substantially above this whole movement over here, where the RSI was still sitting easily above 60, pretty much. So keep that in mind. That right there is a bearish divergence. And what that usually means is that the stock price and the chart itself will follow the RSI. So based on that, that's one of my personal favorite indicators I love to use. Based on that, that tells me that most likely sometime next week, once this gets really, really tight and it finally explodes, I personally think there's a much higher chance it'll go to the downside than to the upside. Much higher chance. Like I would give it like an 80% chance that it's going to go to the downside. Now that's of course not saying that it can't go to the upside. Hence why I got the call as just upside protection just in case. Because nothing is guaranteed in this market. You really just never know. Especially this market that we're in. But again, I am much more confident that it'll go down rather than up. And just off that indicator alone, that's enough to pretty much almost convince me. The MACD is still looking fairly bearish. It's looking like it's starting to slowly peak. It's kind of set a higher low on the MACD over here, which is a decent sign actually. But I personally don't like the MACD too much. I don't put too much weight into the MACD. I put a lot more weight into the RSI and just overall the structure of how the stock is looking. Now, another thing to look at is, of course, the moving average. We did talk about the moving average several times. I remove the Bollinger Bands on the daily, for instance, right? I did say if it ever closes and breaks under the 5-day moving average, that is another signal that we might start looking for a breakdown, a kind of, retreats, a breather, if you will, a resets. And it's currently trading under that RSI. So you can see here the 5-day moving, moving average. The 5-day moving average is 1089. We closed at 1084. So it's definitely under. The next one to look for is going to be this 8-day moving average as well. So it's kind of trading in this range right now. And the candle itself, the opening and the close is fairly close together. Like it's a 0.3 difference, right? So it's not as tight as it was, but the closer it is to each other, the opening and the close, the more indecision there is. So before, when I was looking at it like 15 minutes before the market closed, it was literally just on top of each other. Like it was just a straight line, like just a thin line. But even then, this is still like a decent example of it because there's a long wick at the top and a long wick at the bottom. What this shows is essentially indecision. This is like showing us that the buyers and the sellers are fighting. And it's like, there's no true real indication as to where it's going to go. But this also means that this is going to start exploding soon because of this indecision. That means it's like a massive battle, kind of like a tug of war. Think of it that way. It's a tug of war. You have all the sellers up here, you have all the buyers up here, and this is the rope, and it's kind of tugging, right? So the way it's going to happen is eventually one side is going to give in. One side is going to get pulled into like the water or whatever, right? That's kind of like an example, like, I don't know, an analogy or whatever that you can use. So once one of the sides essentially forfeits, it's going to explode into that direction. So in this case, if the sellers stop selling essentially, and they're the ones that give in, it's going to explode to the upside. If the buyers stop giving in, then it's going to explode to the downside. Another thing you potentially look at that potentially could be bullish is that this is potentially forming a bull flag, right? You can look at it something like this. Something like that, give or take, right? It is somewhat in this little bit of a bull flag formation. Now, again, I'm still pretty convinced it's going to the downside, but if you're someone that needs some form of hope that there is still potential for it to explode up to the upside, this bull flag is, in my opinion, probably the best hope that you have right at the very moment. Which again, like I said, there is still definitely a chance it can go up to the top side, but I think it's much more likely to go to the bottom side. So that's essentially what I'm currently seeing, ladies and gentlemen. Let me know what you guys think down below. If you think it's gonna go up, if you think it's gonna go down. The RSI is also setting up a potential head and shoulders pattern where you have like the shoulder, the head, and the shoulders being formed right here. So keep that in mind, which is why I wouldn't be surprised if we have another day or two of consolidation. It'll pretty much form that shoulder and then it'll fall down as well. So again, ultimately, guys, I'm still looking for the gap fill. I really am. I'm personally a buyer around this area. Not financial advice, of course, but there is still a chance for a breakout. Just watch out for this like upside break. Pretty much if we go back to like 1100 and break 1100 again, if we ever break 1100 one more time, I do think there's still potential room for, at the very least, a retest of 1115. That's the way I'm currently looking at it. So let me know what you guys think down below. Thank you all so much for watching, and I'll see you guys. Actually, look, take a look at the weekly. It's a Friday. I forgot. It is a Friday. Very quickly, take a look at the weekly. So you can see the weekly definitely showing some indecision as well. Sellers slightly dominating the buyers. A much longer wick at the top, so it tells me that the sellers dominated all of this selling pressure over here. But nonetheless, not a horrible weekly candle. Not much to say about this one. This is not really telling me a whole lot, to be completely honest. But again, I still stand by the fact that I think we're about to retrace. So we'll see what happens. But either way, see you guys on Monday. Peace.